again. As he told you, Pankaj spoke to the management of Reliance Capital after the numbers came out, Sam Ghosh, ED and Group CEO. Pankaj, what did you start by asking?
So Anand, if you look at the PAT growth, it just came in at 3% growth, but last year same time there was a one-off dividend. So I started by asking Mr. Sam Ghosh that what's essentially the like-to-like comparable PAT number.
So if you look at our total profits at 207 crores, that's up 3%. But last year what had happened was, last year Reliance Life had paid Reliance Capital dividend. Now it's a subsidiary of Reliance Capital, so it's being consolidated. So the dividend has obviously been double counted. If you take that dividend out, we actually have shown a 33% growth in terms of profits. And if you look at in terms of income also, our income is at about 3,700 crores. That's also up over 30%. So I think income's grown and so has profit levels.
Sir, can you just talk to us about various segments as well? So you have insurance, you have the AUM business, you have the housing finance business. Can you just tell what led the growth?
Yes, so if you look at from all our businesses have obviously shown some growth, and if you look at our commercial finance business, nearly 17,000 crores AUM, grown quite substantially, over 15% growth. And in terms of profits also, the profits are at 57 crores, up nearly over 30%. So again, quite, and the net interest margins also at 6.8%, which is an all-time high for us. So I think that's done very well. Housing finance also has shown significant growth in AUM, nearly 8,300 crores, up over 30%. And profits at about 30 crores. So obviously we expect the profits also to continue to start growing now. And net interest margins again in this business at about 3.5%. Looking at our asset management business, we showed a profit of 122 crores, up nearly 15%. And AUMs also started growing at 1,67,000 crores, nearly up over 15%. And but if you look at total assets under management now, it's over 3 lakh crores for asset management company, which includes our EPFO, pension money. And finally, on our insurance businesses, if you look at it, general insurance has shown a 5% growth in terms of profits, in terms of gross written premium at about 900 crores. And profits have also grown about 20% at 36 crores, over 20%. And our life insurance business has shown a flat new business growth. However, in terms of renewal premium, shown a growth of about 4% at 450 crores. So total new business premium is 650 crores. And obviously, the company shown a break-even, which again last year we showed a loss for the whole year. This year we have shown a break-even. Going forward, also we can continue showing small profits as we go along. And finally, on our broking and distribution business, also we have shown a break-even compared to last year, where we showed a small loss.
So as far as housing finance business is concerned, that has been leading the way in terms of growth in the last 2 or 3 quarters. Can you just tell the performance over there? Will you need more capital for further growth?
Yeah, so if you look at it in terms of our mix of business also in the housing finance company, nearly 57% comes from home loans. Another 15-16% comes from construction finance, and balance comes from loan against properties. Our focus has been to see, earlier we were in the top 40 cities, now we've grown to 80 cities. So obviously that is, after the top 40 cities, we've been seeing some growth in terms of home loans. As well as we've also started doing affordable housing. Nearly 10% of the home loans are now from the affordable housing sector. Again, that has also shown growth. So I think overall the housing sector is still growing strong, especially in the smaller towns.
Right. Sir, before we go to particularly what's happening in the insurance business, can you just tell us what's happening in the sector? First signs of very huge consolidation coming into the sector, which could augur quite well for a player with decent market share?
Yes, I think you can see this is the first big consolidation with Max and HDFC. I think obviously there'll be many more, because a lot of people for the last 10 years haven't done any consolidation. They've been fairly small players. In our case, I think very clear focus is that on the general insurance side, we own 100% of the company. We'll obviously bring in a 49% partner. That we intend to do in this financial year. And also, I think our key focus has been that if you look at both our life and general insurance companies, we are purely agency-driven or broker-driven company. We don't have a bank partner. So this, with the bank assurance opening up, our general insurance company at least has picked up IndusInd Bank, Andhra Bank, and Shamrao Vittal Bank. Plus, they're also waiting for some more PSU Bank tie-ups. So obviously, that will give us a big channel for bank assurance for the general insurance. For life insurance also, the RFPs have all gone out. So I think in the next month and a half or so, or 2 months, you'll find that we'll have some tie-ups. We've already tied up with 6 or 7 small banks, cooperative banks, but obviously we wanted to have some big PSU bank tie-ups as well as private sector bank tie-ups, which should also happen.
Right. Sir, can you just talk about the bank tie-up for insurance? Why would it be important? You've still shown growth into the insurance business without this tie-up as well?
No, see, on the insurance sector, if you look at it, that the key thing is that if it's agency-driven, obviously we can do mainly traditional types of products. But if you have a bank, you also do unit-linked type products. So therefore, you can grow your business faster. If you grow your business faster, obviously your marginal costs come down, and therefore you show profits. So that's how it helps. Also on the general insurance side, basically, obviously we're growing at about 5%. We know we can grow at about 20-25%. In the next few quarters, and this is mainly coming through the bank channels. And bank channels also tend to bring in more profitable business because you got a better mix of business. You get some fire business, some auto business, some health business. So it's a very good mix of retail type business.
Right. Sir, tell about, the Q1 end. Markets were not doing that well. There were fears of Brexit. So, how was the AUM business or, particularly the equity business? Did you see major growth over there?
No, I think if you look at it, obviously the commissions that are being paid out are now not upfronted. It's going through the period. However, if you look at the business times, in terms of business, obviously in terms of equity AUM, our equity AUM has grown quite substantially. We're nearly 50,000 crores. And debt also has been growing because we've been focusing on this retail debt products as well as retail clients. And primarily, again, our focus has been on the smaller towns. So if you go below top 15 cities, we're the largest in terms of average assets under management. Same thing with our SIPs. Again, we've been putting a big thrust on systematic investment plans. Now we have over 1.4 million systematic investment plans, and that's been growing at about 20-30%. And there, I think the intermediaries are not worried too much about distributor fees because they know that they'll get annual fee income for the next 3 to 5 years, however long the SIPs last. So I think that way, I think we are fairly well diversified and growth has been there.
So, also if you could just say about the NPAs in Reliance Capital. Of course, we've spoken about the housing business where NPA is low, but apart from that, in the commercial finance business, what was largely the GNPAs as well as the net NPAs?
Yeah, if you look at on a commercial finance, obviously on the housing finance side, and loan against LAP in the housing finance company, our NPA levels are at 1%. So they remained at 0.9 to 1%. So we are not too worried about that. On the commercial finance side, again, if you look at it, our NPA levels have been about 3.3, 3.4%, and they've remained stable. We had problems in our commercial vehicles side, which like the entire market industry had, but that is again stabilized, and now we don't have any issues on that front. So I think overall, I think NPA levels have been fairly stable. And if you look at on the commercial finance, net interest margins at 6.8%, though with NPAs of 3%, we still showing an ROE of over 15%.
Right. So as far as PSU banks are concerned, of course, there have been some issues about capital. They are continue to lose market share. For decent size NBFC like you, do you believe that it's a very big opportunity?
No, I think, see, if you look at it, if you look at NBFCs tend to have focus on retail customers. Which even if you look at in the past, number of PSU banks have focused mainly on a larger customer base, while we are very rural and very retail rather. In a retail customer base, I think as people get more and more wealthy, obviously affordable housing becomes an issue, becomes a big opportunity. Normal housing also becomes a big opportunity, and that is where we are trying to tap. And that's why actually below the top 20 to 30 cities, you find the huge opportunities are there because obviously customers are getting more affluent and they need more and more products, be it cars or homes or other types of vehicles. And that's why actually NBFCs have been doing so well. And obviously the growth opportunities for NBFCs also have been fairly substantial.
Do you think NPAs in the system have bottomed out and now probably things would just look better?
No, I think see, if you look at it, obviously each sector has its own challenges. The infrastructure sector had challenges, the mining sector had challenges, etc. I think those issues will slowly peter out because most of the banks have started providing on a normal, have been providing quite substantially in the last few quarters. Whilst companies like ours, we are mainly in the retail segment, and the retail segment, actually NPAs, unless your underwriting is very bad, normally NPAs are very controlled, and that's why actually NBFC valuations have obviously also gone up quite substantially.
Right, so apart from the changes that you've done in the business, one of the key things has been the cost of funding which has come down. Can you just tell us for Reliance Capital that continues to be one of the big triggers? Cost in the systems have come down further from the June ended quarter.
Yes, actually if you look at the cost of funds obviously have gradually come down. I think we've also had about 25 to 50 basis points improvement, and that's why our net interest margins are at all-time high. If you look at it being at 6.8% net interest margins, it's been a great achievement. Yields haven't gone up to that extent, but at least because the cost of funds coming down, it's helped. And this will continue, I believe, going forward.
Sir, thank you so much for taking out time for us and explaining us what Reliance Capital did in Q1 of FY17. We're taking a break.